Nifty holding tight above that 18,000 mark.
From the lows, there has been a recovery of 80 points, but we're still about 80 points away from our all-time high level.
Nifty has picked up some pace, so now it's up around 50-odd points.
Hoping that we will open with a 100-point gain on the Nifty, but as we are getting into closing bell, some of the gains have peeled back, 20-25 points off.
Another good day of trade. We wrap up with the Nifty closing in above 2/3 of a percent higher. The Midcap index over 1% higher, and the Nifty Bank very close to that 42,900 mark.
Hello and welcome to CNBC TV 18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are our top stories for the day. Despite a volatile session, the last trade ends in the green for the second day in a row. All sectoral indices except for the Nifty FMCG trade in the green. Metals lead from the front. Metals shine. The index soars over 4%, easing of COVID curbs in China, expectations of better demand in 2023 and a copper global deficit in 2022 aid metal stocks. Bitter pill for Laurus Labs as 4 employees die in an accidental fire in its API plant in Visakhapatnam. Separately, Pharma gains after its JV Turgene Biotech gets the green signal to manufacture and market the PCB15 vaccine. VMart tells CNBC TV 18 demand for discretionaries is still weak in Tier 3 and 4 towns. TCI Express points to a slip in e-commerce volumes, and Shriram Finance indicates limited appetite for new commercial vehicles. And in stocks and news, HEG soars after it enters the lithium cell business. United Spirits ends flat despite a buy call from Nirmal Bang. But Mahindra CIE gains over 3% after Motilal Oswal bets big on the stock. Well, let's also tell you what we have lined up for you in the next 30-odd minutes. It's a packed show as always. In Market Opinion, we have Gautam Shah of Goldilocks Premium Research, and in Big Corporate Voices, we have Lalit Agrawal, who's the founder of VMart Retail. Well, let's get to the first top story. Despite what was a volatile session, the markets ended with gains for the second straight session. The Sensex and the Nifty ended over 0.5% in the green, while mid-caps outperformed. That index ended over 1% higher. Metal stocks led from the front. All of the sectoral indices, in fact, ended higher, except for Nifty FMCG. Prashant Nair is here with a wrap.
Well, the pullback continues. A lot of people in the morning were doubting whether yesterday was a one-day wonder. And I think today's session put some of those doubts to rest. So we had a decent day and not very much by way of volatility, although the market did come off a little bit from the highs of the day. Banks did a little lesser as compared to the Nifty. I'll get to specifics. Broader markets were fine. Mid-caps and small caps. Advance decline was some 4:1 in favor of advances. Metals is a space which was, did the best, 4% in the index itself. PSU banks continued to pull back, and real estate as a space did well. Actually, the FMCG index was the only one which was lower, except that most of the sectors were in the green. The top 3 gainers, all from metals and metal indices: Hindalco, Tata Steel, JSW Steel, your Tata Motors, ONGC, and Asian Paints, which did well as well. In the broader space, PSU banks, right? IOB stood out with very large volumes. Non-Nifty metal names, JSPL, Nalco. There were smaller names like JBM Auto, HEG, Fact, Praj Industries, sugar names like Triveni, Dwarikesh, Dhampur, and data patterns which stood out as well. As I said, breadth was fairly positive and strong. The Nifty is now bumping into an important level, which is basically the rising trend line all the way from June lows. It's a clean, straight, upward sloping trend line, on the break of which the market accelerated its fall, and we are now back there at about 18,140. And I think a day more, 2 days more of stable, normal kind of markets perhaps should give more confidence to the bulls that what we saw late last week perhaps was, not structural weakness, but just weaker hands getting shaken out and the market devoid of froth looking a little better. Back to you.
Okay, all right, Prashant, thanks very much for that. Well, let's get in some market opinion then. We have Gautam Shah, founder and chief strategist at Goldilocks Premium Research. He says investors have become cautious and conservative before taking a call on future investments. He adds the focus is on the top 100 stocks at present. Listen in.
We've gone a little cautious and conservative at this point of time. We just want to take a step back and understand this setup better before we can actually take a call for the next 1 to 3 months. And I think, like most people, 18,100 clearly is an important resistance that we are working with. We need a close past the same to give that first confirmation that last week was just a one-off kind of a decline. And the ceiling on the upside is about 18,250. So I think broadly we are in that band of 17,800 to 18,250. I want to believe that what happened in the last couple of weeks was just one-off. It was pretty much forced selling, which will get absorbed quickly. But for that, I need concrete triggers on the charts. And if at any point of time 17,800 were to break on a closing basis, that would pretty much be game, set, and match to the bears. And then, maybe we get into a medium-term downtrend. I want to be sector specific, I want to be stock specific, and I'm focusing more on the top 100 large caps at this point of time and just letting go of the mid cap, small caps just for the time being. Given what we've seen in the last 2.5 weeks, and January and February, we just have too much on our platter, whether it's earnings, the budget, and the global market developments, and the impact of possible, COVID that could come in over the next 2 to 2.5 weeks. So large caps is where safety is. At least you have the liquidity, you can get in, get out really, really fast. And I think the top 100 has really not been impacted so much in the last 1 month. So I know we've seen a good recovery in the mid caps and small caps. If you're a long-term investor, maybe this is a good time to top up. But if you're playing for the next 1 to 3 months, I would still go with the large caps.
Okay, all right. On to the second story now. Metals shine after that index soared a whopping 4%. JSPL, Tata Steel and Hindalco gained anywhere between 6 and 9%. Easing of China's COVID policy measures gave a boost to these stocks. Manisha Gupta is here with the details on this. Manisha.
Well, China clearly is on the top of it when it comes to metals. So while the reopening is ensuring that the demand is expected to pick up, remember when China opens up, the production also will pick up because China matters 50% in sense of production and consumption of many of those metals. So markets still trying to see a balancing between this. Also because the metal prices have come off their highs of 2022, the expectations are that as the new year begins and as you see those weightages and resource allocations begin in the first week of January, a lot of this money could actually be going into metals because the markets do expect that as we move forward from here, there is demand that could be coming in from China, but also from US and European Union because infrastructure is going to be a major push there. It also has to do with the renewables, and many of these metals, mind you, are looking at much tighter inventories. We are looking at a second straight year of deficit in 2022, which could spill over in the next year as well. So every brokerage that I have spoken to say that copper is the metal to keep an eye on. The second on everybody's radar is aluminum. Here as well, there is power rationing that we have seen in Europe and in China that could actually impact the aluminum production going forward, and that could be supportive for this one. And the third metal that should be on your radar is zinc, where as well, if you look at the inventories in the global markets are just about for 2 days of global consumption. So whether it has to do with the dollar index, which is off and just about trading at 104, Chinese demand, restocking, and the fact that you are looking at tighter inventories, all of that works in favor of metals going forward from here.
Okay, all right, Manisha. Well, stay with us though. Prices of sugar stocks like Balrampur Chini, Sri Renuka, in fact, rallied anywhere between 5 and 8% as global prices of sugar hit 6-year highs. Tell us more.
Oh yes, the sweet run continues in case of coffee, where the global raw sugar price is still holding around those 6-year highs. We also have seen prices gain up by nearly 10% in this year until now. And there are concerns about global availability. And then you also have strong, super strong speculative buying in the international markets, also supporting sugar. For the Indian markets, it's all about the ministries and the measures that we are awaiting. To begin with, the Ministry of Consumer Affairs on 26 December has said that there's going to be a 100% incentive on sugar for ethanol and B-heavy molasses from cane juice there. So there is a big incentive now coming in for the market here, and this formula will come into effect from January 2023. The other is from the Petroleum Ministry, where the markets are expecting a revision of the ethanol prices. This is ethanol that will be made from the damaged food grains, and the current prices, while they stand at 55.54 per litre, the industry is expecting somewhere around between 3 to 4.5 rupees of a revision on the upside on this one. So in expectation of that as well, we have seen support continuing for the sector.
Okay, all right, Manisha, thanks very much for that. Well, moving on, the third headline today, it's a bitter pill for Laurus Labs as that stock fell close to 2%. This is after a fire broke out in a block of the company's API manufacturing plant in Visakhapatnam. So the news is that the fire occurred in a block of the API manufacturing plant in Visakhapatnam. Operations in the other production blocks have been running smoothly. 2 employees as well as 2 contract employees have lost their lives This was on reaching hospital. So that was the unfortunate bit of news. One regular employee is currently undergoing treatment as per the company. The company has launched an investigation into the incident, and the company estimates that there was no material impact which took place in terms of the operations. But nonetheless, for people, losing their lives is basically a tragic piece of news that came in for Laurus Labs. But that's not all. Aurobindo Pharma gained 1%. This is after its joint venture, Turgene Biotech, got the SEC recommendation to manufacture and market the PCV15 vaccine. So just a couple of details. They've got the SEC, which is the Subject Expert Committee recommendation to manufacture and market this particular vaccine in India. They are expecting formal approval from the DCGI in coming weeks. It is important news because they have made a small foray into the vaccine space. This is a pediatric vaccine, and they will be launching this particular vaccine once they get formal approval on it. But let's move on then. Glenmark Pharma has launched a triple fixed dose combination drug for diabetes treatment. This took place a couple of days ago. Alok Malik, the company's executive vice president and India business head, told CNBC TV 18 that the drug has a huge potential and its market size is worth around 800 crores. Listen in.
From the molecule combination point of view, so this is the first of its kind. It's a unique combination of a DPP-4 with metformin and pioglitazone. It would directly or indirectly compete with the existing combination of sulfonylurea, metformin, and pioglitazone also. So, but since there has been a very good acceptance about DPP-4 and metformin, and pioglitazone further adds to in terms of the overall treatment, so that's why this combination has huge potential. And as I mentioned about that, the overall estimated size of the market where it would compete is roughly around 800 odd crores.
Okay, so that's the word from Glenmark, but we need to take a short break. Before we do that, we leave you with some market commentary from Prashant Khemka of White Oak Capital Partners. Listen in.
Globalization is very much there for good, and it is maybe a bit of a speed breaker in the interim, but for India it's actually can be a very positive game changer of sorts, because the companies worldwide are very keen to diversify their supply chains.
From China.
From
so it's the India plus one.
Absolutely. From excessive dependence on China, they want to diversify. India has the opportunity, and it should grab it with both hands, which it is doing so, but I think there's always room to do a lot more. It's an opportunity.
So Apple does 5,000 crores of iPhone sales. That telling sign to you?
That is certainly, you know, from India's perspective, a very big positive. The opportunity size in front of us is, compared to that, is like tens of times, if not hundreds of times bigger, if you look at the manufacturing sector as a whole. IT services, if I take as an example, from time to time, they get written off by the market. One of the things that market has for the last decade or so believed is that IT services sector is an X-growth sector in India, because they think of, or X-growth sector because NESCOM and IT companies, they guide in dollar terms or constant currency terms, which are like dollar equivalent. So they talk about 7 to 8% growth. Now, you know, in India, 7 to 8% growth doesn't appeal to anyone.
Doesn't wake up anyone.
Yeah, if you are less than double digit, you are no growth or slow growth company.
Welcome back. You're still with us on Markets Today. Let's get to the rest of the stories that we're tracking for you this evening. The fourth headline today, demand woes remain. VMart tells CNBC TV 18 that inflationary pressures are hurting wallets, while TCI Express points to a slip in e-commerce volumes. Shriram Finance indicates limited appetite for new commercial vehicles. Listen in.
In the December month, we are seeing a little lull, and then people are once again, the winter was not there for the last 15 days, and then now once again in this week we are seeing winter coming back. So it is once again coming back. So largely it is driven by seasonality or festival, or the need in the family, which is wedding. So need-based shopping is happening, but other than that, the aspirational levels are not getting met because there is a stress in the customer's pocket. So we are seeing a little dull from that perspective if we compare it from the pre-COVID levels. Same-store sales growth looks a little difficult in this particular year, but in the next year, definitely same-store sales growth, I am just comparing it from the 2019 pre-COVID level. But if I look at from the 21-22 levels, it will definitely be positive. It will be, I can't tell you the number right now, but yeah, we will see some good number coming in.
In India, we don't really have, the demand hasn't taken off the way it should have. And the cost is still quite high in terms of delivery. And that has not come down. So we do not have the option of getting economies of scale in e-commerce. And of course, investments are very high. So what it overall means is that the profitability is going to be very less or negative for that matter. And I'm not saying that it's the question of it now. Ever since it has happened, ever since e-commerce has started in India from 2012, it's the same story. It's been 10 years. No company has ever made any profit in this.
We're seeing this pickup in demand from a small commercial vehicle to a medium and heavy commercial vehicles. In fact, we are also seeing demand coming up in construction equipment, machinery.
Okay, well, on to the fifth story today. HEG rallied 8%. This is after it incorporated a wholly owned subsidiary. With this, HEG will make an entry into lithium-ion cell business. Vivek Iyer is here with the details.
Well, that's right. One of the sharp movers in today's trading session, along with the entire metal pack, the graphite electrode makers too are surging. When you're talking about HEG specifically, what the company has intimated to the exchanges is the fact that they've gone ahead and incorporated a wholly owned subsidiary by the name of TSCC, which is going to manufacture graphite anodes for lithium-ion cells. So what analysts tell us is that, the opportunity size for this particular market is quite big, and which is why, the analysts at this point of time believe that the HEG can benefit quite significantly and materially from this particular inflow. So 2,000 crore capex, as you mentioned, is what they've announced. It's going to be done in two phases. The first phase of 1,000 crores of capex is going to cater to 10 to 12 gigawatt hour of cell manufacturing capacity, and phase 2 is going to be a further 1,000 crore capex to double the capacity to cater to almost 20 to 22 gigawatt hour of cell manufacturing capacity. Along with that, there has been a sharp rebound from September lows as far as the electrode prices are concerned, so which is why you're seeing some positive sentiment of both of these stocks.
Okay, all right, Vivek, thanks very much for that. United Spirits ended flat even after Nirmal Bang gave the company a buy rating at a target price of 880 rupees a piece. Surbi is here with the details.
Hi, thanks for that. So Nirmal Bang met with the management of United Spirits, and here are some key takeaways. The company says that there is no change in the demand momentum. They do see that the pace of upgrades from the popular segment to the lower prestige segment is under pressure, but they still will keep an eye on that for the next few months. The Indian wedding season is back and in a bigger way than before, and that's helping the demand as well. They're not seeing any signs of downtrend currently. With respect to the cost front, the management says that they continue to see inflationary pressure on ENA and glass bottles, two key raw materials for the company, and the benefits of falling crude prices and paper prices will be seen with a lag. They expect the benefits to kick in by Q4 of FY23. The management expects that the gross margins will normalize by end of FY23. With regards to A&P spends, which was lower in the first half of FY23, they expect it to go back to 8 to 9% of sales by end of FY23. The margin guidance has been maintained to mid to high teens for FY23, and Nirmal Bang has a buy rating on the stock with a target price of 880 rupees per share.
Okay, all right, Surbi, thanks very much for that. Well, meanwhile, Mahindra CIE also gained close to around 4%. This is after the brokerage firm Motilal Oswal issued what was a buy call on the stock. Sonia's here with the details on this.
Absolutely. So the stock is buzzing. It's up almost about 4% on the back of a buy rating that's coming from Motilal Oswal, where they do have a target price of 360 on the stock. Now, they talk about how there are a couple of reasons which are positives for the company. On one hand, the Mahindra CIE company is looking to sell its German commercial vehicle forgings business, and if that goes through, then it's a big positive for them. It will clean up their balance sheet and it will result in a better financial performance. They're also talking about very strong traction in the India business for Mahindra CIE. Now, the EV orders are gaining quite a bit of momentum, and that will result in better profitability. The management has reiterated its focus on profitable growth. They're also talking about improving their margins to 15% versus 12% that they clocked locked in 2021. So all in all, two reasons why Motilal Oswal is quite bullish. One is the proposed sale of the German commercial vehicle forgings business, and the other is the India business gaining momentum. Back to you.
Okay, Sonia, thanks very much for that. But if it is drama you were looking for, the cryptocurrency ecosystem had it all. 2022 became the year that broke the cryptos back. Manisha Gupta recounts what could have been, what went wrong, and what 2023 holds for the asset class.
The year 2022 witnessed the crypto winter loaded with sell-offs, scandals, layoffs, and unfavorable macros and markets. The shutdowns, rug pulls, and the contagions that followed made matters further difficult. The market is full of debt due to rise of centralized lending schemes. 2020 onwards saw a huge build-out in retail, yield-based DeFi, crypto shadow banking, and unsecured or under-collateralized lending. The pain started with a sustained sell-off in cryptos. For the current year, the prices have declined sharply, down by 60% for Bitcoin, Ethereum is down 64%, decentralized Mana is negative 88%, and meme coins Doge and Shiba Inu down 47 to 72%. The total crypto market capital hit peak at their $3 trillion, which has now come crashing down to below $1 trillion, a more than 70% of decline. The sell-off was accentuated by collapse of algorithmic stablecoin Terra USD. It was clear from the events that followed that the credit risks and counterparty risks were not assessed with vigilance. Down went the Celsius network, once valued at $20 billion. Same happened with Three Arrow Capital. Equinox, which was listed on Nasdaq, also shut shop. The other names like Wald, Voyager Digital met with the same fate. And towards the end of the year, the once valued at $32 billion FTX crypto exchange filed for bankruptcy, followed by BlockFi and Bitfront in Singapore. The other market, which is NFTs, and that was quite a rage and became a mainstream phenomena in 2021, also saw a meltdown in 2022 with volumes crashing nearly 70%. And then there is more, and this is from miners who, due to fall in crypto prices, have not paid electricity bills, leading them to sell their holdings. The total cryptocurrencies as of now stand at more than 10,000 in number, and in last 10 years, nearly 2,421 cryptos have failed. When markets started to fall, funds, lenders, others were forced to sell, leading to a domino effect. Street believes that 2022 may be drawing to an end, but the crypto winter could last another 6 to 8 months.
Okay, all right, Manisha, thanks very much for that. And on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.